Most people will never know this, but silver, not gold, is poised to surge by 500% before the next major market crash. While gold grabs headlines, it is silver that moves first, quietly and violently. This is still happening today, and the signs are hidden in plain sight, buried in market reports, government stockpiles, and subtle central bank manipulations. The public sees only price charts and commodity news. They never see the forces quietly positioning for the next financial storm. Here is what they don't want you to see. Silver is not just a metal. It is a weapon in the hands of those who understand the cracks in the global monetary system. Most people will never know this, because the narrative on mainstream financial media focuses on gold, the safe haven, while ignoring silver's unique vulnerabilities and potential. Silver is both an industrial commodity and a monetary metal. Its dual nature makes it far more sensitive to inflation, money printing, and investor panic. Every time a major crisis looms, silver reacts first, sharply and unpredictably. Central banks, hedge funds, and bullion banks understand this. Most people will never know this, but the physical supply of silver is far smaller than public perception. Mining output is limited, hoarding is widespread, and the paper silver market is manipulated daily to keep prices artificially low. This is still happening today, and when the collapse comes, silver will be the first to break free. The history of silver tells the story. In the 1970s, as inflation soared and currencies weakened, silver exploded from $1.50 an ounce to nearly $50 by 1980, a more than 3,000% gain in nominal terms. Meanwhile, gold lagged behind in momentum, drawing investors only after silver's initial spike. Most people will never know this, but the pattern repeats. In 2008, during the global financial crisis, silver spiked faster than gold, climbing from $9 to over $20 within months. Governments, banks, and insiders anticipate this movement. This is still happening today, and those watching carefully can position themselves before the general public reacts. Industrial demand has shifted significantly over the past decades. Silver is essential in solar panels, electronics, medical devices, and even high-tech batteries. Global supply is constrained, with the top producers concentrated in just a handful of countries. Every policy, every subsidy, and every green energy initiative increases silver demand while restricting production. Most people will never know this, but these invisible forces make silver a uniquely explosive asset during financial turmoil. In times of fiat currency weakness, silver's industrial scarcity combines with monetary demand to create sudden, dramatic price moves. This is still happening today, and only those aware of these structural pressures will benefit. Paper markets mask the truth. The Codex and other futures exchanges allow massive shorting of silver, suppressing visible prices. Physical supply is siphoned to private vaults, hoarded by insiders. Most people will never know this, but the discrepancy between paper contracts and physical metal is extreme. When confidence in paper silver collapses, the scramble for physical ounces will ignite a price explosion. This is still happening today, and history shows these imbalances precede every major silver rally. Manipulation is not new. During the Hunk brothers' attempt to corner the silver market in the late 1970s, they faced regulatory pushback, margin calls, and forced liquidation. Yet, even that story exposed a fundamental truth. Silver is scarce, manipulable, and capable of extreme swings. Most people will never know this, but the same forces are quietly at work. Today, banks, hedge funds, and insiders quietly accumulating physical silver, while the public remains unaware. This is still happening today. And when the system tips, the leverage will magnify gains for those prepared. Now, look at the timeline leading into 2025 to 2026. Global debt has reached unprecedented levels. Central banks have printed trillions in stimulus. Inflation is resurfacing quietly but persistently. In 2025, industrial demand for silver is forecasted to rise by 15%, while mining output remains flat or declining. Most people will never know this, but each quarter, large institutional investors quietly accumulate physical silver, draining supply. By mid-2026, reports suggest that physical silver holdings are approaching historical lows. This is still happening today, and when the next financial shock arrives, silver's price will react faster and harder than gold. The mechanics are clear. When fiat currencies weaken, silver acts as both a monetary hedge and an industrial commodity. This dual role ensures rapid price escalation. Most people will never know this, but the leverage on silver contracts, coupled with paper market manipulation, means the initial surge could happen almost overnight. This is still happening today, and the opportunity window is extremely narrow. Who wins? Those who understand the pattern, who can access physical silver before the general panic, and those who recognize the indicators in industrial usage, central bank behavior, and debt levels. Who loses? Everyday investors chasing gold too late, uninformed speculators, and anyone holding fiat cash or paper assets during the initial surge. Most people will never know this, but when silver detonates, the difference between preparation and ignorance will be stark. This is still happening today, and timing will determine the difference between financial freedom and missed opportunity. International factors play a role as well. China and India, the world's largest silver consumers, are quietly stockpiling. ETFs and bullion funds report inflows, but the true scale of accumulation is hidden. Most people will never know this, but central banks, national treasuries, and private funds are positioning to benefit from the next surge. This is still happening today, and these accumulations create a tipping point where the public demand will overwhelm supply instantly. The warning is clear. Study historical cycles, watch industrial demand, track central bank behavior, and secure access to physical silver before the next crash. Most people will never know this, but ignoring these signals ensures that they will be left behind when silver detonates. This is still happening today, and understanding the timing and magnitude of silver's move is the key to surviving and thriving in the coming financial storm. By 2027, leverage in paper silver markets will reach critical levels, creating the perfect storm for a breakout. By 2028, industrial shortages will further constrain physical metal availability. Retail investors who remain unaware will face a sudden surge in silver prices. Most people will never know this, but history proves the early movers always win. This is still happening today, and preparation before the surge is essential. If this video woke you up, drop a like and subscribe. New forbidden truth every single day. Turn on notifications. The next one might save your wealth. Comment the one thing you're doing right now to prepare. I read every single one.